You know, over the past couple of years, Steve has shared many tips on how new customers can get started with the Reitmeister Trading Alert service. Unfortunately, that information was scattered in many different locations, until now. Now we're going to set things straight, as they say. This new member Quick Start video should be the first thing that all new members explore to get on the right track. And we bring in Steve Reitmeister now to help us do just that. Steve, there's going to be a lot that you're going to cover in this video.
Yeah.
Give us a quick rundown.
Okay. I'm going to put up on the screen here. I'm going to talk about the nature of the service, who I am as an investor, what people should expect, how active of trading we're going to be doing. How to get started with the picks. You know, when they come on board, there's a bunch of picks in there. Should they buy all of them? Should they wait for new picks, etc.? How much money to get started with? How to be more or less aggressive with the recommendations than I am in the model portfolio. Why aren't all the stocks #1 ranked, which is certainly a question that we get, and why I don't like stop orders. So that's what we're going to knock out, and should be very informative for folks.
All right, we've got a lot of ground to cover. Let's get right to it. What is the nature of the service, and what type of investor stands to benefit most from it?
Yeah, this is going to be an active trading portfolio for folks who want to really harness the power of earnings estimate revision. So yeah, we're going to be buying a lot of the Zacks #1 ranked stocks, looking for them to beat earnings surprises, get more estimate revisions, and ride that higher. Now, given my background, I'm going to throw in a dash of value because I'm kind of a value investor, and also a little bit of market timing. The market's not always going to go up and up and up, and at times when it's going to look a little more difficult out there, we're going to want to get more defensive or even short the market. When you blend these elements together, the estimates, the value, and the market timing, this is how we're going to generate outperformance over the market. One last thing as far as when I say active trader, I'm not talking about day trading here. Over the past couple of years, the average holding period has been just about shy of 3 months holding period. What I'm going to do is I'm going to cut losers fast. I'm going to let winners run. It's been averaging about a 3-month holding period.
All right, makes sense. Let's get into the topic that most new members ask about. That is, since you have over 10 positions in this portfolio much of the time, then how should a new person get on board these picks? Should they buy all the current picks right out of the box, maybe wait till others come out?
Right. For me, the answer is very clear, and I highly recommend that people buy all the picks in the portfolio at one time. What you have to realize is that these are not just a list of my 10, 12, 15 favorite stocks. It is a diversified portfolio that's blended together, you know, where the whole is greater than the sum of the parts, okay? So if you just pick and choose from amongst these stocks, you're going to be missing some elements I'm trying to put in there. So I got aggressive elements and conservative elements. I got high beta and low beta. I got income producing and non-income producing. I have all this protection and all these things seeking upside. And it's what this portfolio is meant to do together. Now here again, people have to remember, if I didn't like the stock, it wouldn't be in the portfolio in the first place, okay? Right. So I truly believe that when people get started, and whenever it is they get started, they should take the whole portfolio as it is. Now, one of the things I think gives new members comfort is that I have a target price on all the stocks that I have in there. I put that target price table in the commentary every Monday, and what you'll see is that the target price for the stock has very little to do with how much the stock has gone up to date. Meaning, if I left folks to their own devices, they would take a look at the portfolio, they would skip all the ones that are already up 20, 30+%, because they'd say it's already played out. But those are the ones that maybe had another earnings beat, the estimates went higher, and they're ready to go up another 20, 30%.
Good point.
So I am very focused on the future, not the past, and so that's why you buy the whole portfolio, even the ones that have already come up already.
All right. There are a lot of folks out there, too, who are intrigued by the dollar value of the portfolio. Tell us what that's about.
Yeah. When we started in February 2009, we came with the concept of having a model portfolio of $100,000. The idea being that we don't want folks to always have the same allocation of every stock, okay? Some stocks are worthy of a larger position, and some we just want to take a more speculative position and maybe have half of what we do in a normal position. So this allowed us to have more precise allocations into each stock. Now, we have people who have as little as 10,000 in there, and we know we have many that are well over $1 million in the portfolio. So what's important is if you want to follow the recommendations, figure out how much you want to put in the portfolio, and then just follow the allocation. So I'm going to show where on the home page they can see this. It's called the market value percentage column. I've circled it here, and whatever amount you're going to put in, just kind of follow the percentages and make sure that your percentage of your portfolio is allocated in the same way.
All right. So what do you say to someone who maybe wants to be more or less aggressive than you are?
Yeah. So this portfolio matches what I do in my personal trading account. Okay, so I'm definitely putting my money where my mouth is here. Okay,
Right.
But also that's a statement that right now I'm 44 years old. I am 20 plus years away from retirement, so I'm willing to take a little more risk because I don't need the money right away. Also, I've been investing for 30 years, and I'm very comfortable with what I can do, and I can suffer losses, maybe more than some others. So I guess what I'm saying is that I may be more aggressive than some of the folks out there,
Right.
and that's maybe uncomfortable to them. And I may be more conservative than some others who are willing to take even greater risks than I am. So there are ways in which to bend the portfolio around to suit them.
Mm-hmm.
The more conservative person, it's real easy. Look for the stocks that are larger cap or that are more defensive in nature in the portfolio, and have a higher allocation of those, and trim down the allocation you put towards the small caps and aggressive picks. Now, the more aggressive person is going to do the exact opposite, okay? They're going to want to take more of the speculative picks in the portfolio, a little higher allocation than that. But also, I have a number of folks who tell me how successful they are taking the recommendations from the service and doing options. So doing, in the money or even out of the money call writing, call contracts. I'm not going to give any personal recommendations on those, but if someone is comfortable with trading options, they can certainly do that with the service, and that's another way to leverage the timeliness of the picks in the service.
All right. I remember some previous videos that we did together where some customers asked why all of the stocks in the portfolio are not Zacks #1 stocks, #1 ranked. What's the reasoning behind that?
Okay. That's probably one of the longer explanations. I'm going to try my best to keep it tight. But I'm also going to share at the end some additional resources people can look at to try and understand the effectiveness of what I'm doing here. So yes, earnings estimate revisions are the most powerful force impacting stock prices. Zacks #1 ranked stocks harness that power. Mm-hmm. And you'll find 80-90% of my picks when I first put them in the portfolio are #1 ranked stocks. Okay, so why would I keep a #3 ranked stock in the portfolio? Okay. Most companies become a #1 rank right after a big earnings surprise. They have a big earnings surprise. The brokerage analysts take a look at what's going on. Business looks great. They up their estimates. That fires off to our computer systems, becomes a Zacks Rank 1. Now, there's 90 days. I'm going to show my great example here. There's 90 days in between earnings announcements. For most companies, there won't be too many estimate revisions in between that. They're going to wait until the next earnings announcement. But the Zacks Rank only looks at estimates within a 60-day time frame. So what will happen is a company that becomes a #1 over here is a #1 and gets the 60-day mark. There's no changes in estimates. It becomes a #3 rank right here. But now, between here and here, we have about 30 days until the next earnings report comes out. Mm-hmm. That company that slides back down to a #3, that still has a lot of the great inputs into it. It still had positive estimate increases. It still is more likely to beat expectations in the next quarter and have another round of estimate increases and have another boost in stock prices. And so I'm definitely going to hold on to those stocks. Now, if this explanation doesn't make enough sense to you, if you go to Zacks.com, we have an education homepage. And from there is a section for the Zacks Rank. Go there and you'll see a video all about Zacks #3 ranked stocks, and I will go into a deeper explanation of the reasoning behind this. But I'm definitely harnessing earnings estimate revisions, but sometimes they do slide to #3, but that doesn't mean the party's over.
Okay, fair enough. Let's get to that other maybe quasi-controversial item on your list that you mentioned that has to do with stops. Brings in a lot of questions from
sure
customers. Why don't you believe in stops?
Okay. I know this is an active trading service, and most other active traders believe in the use of stops to not let losers run against them. And I also believe in not letting losers run against me. But Mostly the people who use stops have more of a technical investing background. They believe more in charts and price action as a predictor of where stocks will be going in the future. I do not believe in those things. I believe that fundamentals, such as earnings estimates, give me a much better indication of what stocks will be going higher, which will be going lower. Plus, as a value investor, I can put a fair value price target on a stock. That's more like the true north of where a stock should be going and not what has happened in the past few weeks in the price action. So for me, I'm willing to give a stock a little more room to work out its kinks, okay, before I'm willing to sell. So in other words, some people go, at 10% I am selling it, or 12%.
Right.
And I might be willing to give a little more room, especially if the stock market is going down. If the stock market is going down, all stocks will be going down. And smaller, more aggressive picks that have higher beta will fall more. It has nothing to do with the company. It just has to do with the market's going down and people are throwing all the stocks out. Okay? And right when these stops take place for a lot of the technical investors is right when the stock will bounce back up. And if you're sitting on the sidelines and the stock bounce back up, how upset will you be then? Okay, so if you, the customers at home, want to use stops, you can do that. What we're going to do is that after 3 or 5 of these stocks that you use stops on and I didn't, let's compare notes and see who did better, okay? And I'm happy to get the I told you so emails from some customers, but just so you know, I'm going to be sending you some as well, okay? So that's why I don't use stops, but the key is I won't let losers eat away at our portfolio. I just have a little different reasoning behind when I will sell and when I will hold.
Obviously a hot button issue.
Yeah, sorry if I got a little live on that one, yeah.
What have we left out for new members?
Yeah, the next stop on the journey after this video is definitely to take a look at the guide for the service, okay? So I'm going to put up on the screen here where they can get that from the home page of the Reitmeister Trading Alert. This guide's going to go a little more in depth on my background, why I'm a top-down investor, why I believe in fundamentals and earnings estimates and value and so on. Also, it's going to go into some of the particulars of the service, how to interpret the signals that come out of the service, what they'll find in the daily email summaries, et cetera. It'll take 10 minutes to breeze through this, through this guide. And hey, you just spent a lot of your hard-earned money on the service. Take the extra 10, 15 minutes, go through it so you know what you're dealing with. The last thing is that whatever we didn't cover in this video, and whatever we didn't cover in the guide, there still might be some questions left over, and that's why we have a support team. So I'm putting that information up on the board here as well. Call us, email us, let us know what you need, what's not making sense to you. We're going to help you out. Because here again, the key is I want to show people a method of investing using earnings estimates and my dash of value, et cetera, to have the success they always expected in the stock market. So if this video and the guide isn't clear, we're here for you. So I want to hear from you.
All right, thanks. We appreciate that. We'll look forward to you stopping by the old video ranch here from time to time to update us on what's going on. And don't forget, in between these video updates that you're going to be seeing now going forward, Steve does pen a daily update for you, comes directly to your inbox, and you'll want to keep your eyes open for that, because there is where you learn about Steve's latest thinking, up to the minute almost, in the market and in individual stocks that are in the portfolio. In the meantime, we hope that this quick start video was very beneficial for you, and hope that you got some of the questions answered that you came here with, and maybe follow Steve's recommendations and become a profitable investor. With Steve Reitmeister, I'm Terry Ruffalo.